Hi, I'm Mike Stanton. It's November 15th. This is the BAM Weekly Muni Market Update here with Morgan Fahey from BAM's Capital Markets Desk. Morgan, kind of a getting back to business week for the capital markets, including muni bonds. What did you see?
Sure. The market was continuing to digest the election results, the Fed's latest cut from last week, and the economic data that came out this week. We saw CPI come in as expected at 0.2% for the month and 2.6% year over year, which was slightly above the 2.4% number we saw in September. Retail sales came in this morning at 0.4% versus an estimate of 0.3%. And after the Fed's commentary this week, the market is still discussing potential for an additional rate cut at the December meeting. So I'm sure the market, will continue to monitor economic data as it comes out prior to that last meeting of the year. And on the muni side, we saw Lipper report inflows for the 20th consecutive week, totaling around 300 million. We saw strong bid wanted activity, and munis as of this morning were slightly tighter on the week, about a basis point in the 10-year part of the curve and 2 basis points in the 30-year part of the curve. Treasury yields also moved higher on the week, and at the time of the video on Friday morning, the 10-year was at a 445 and the 30-year at a 463.
And it'll be interesting to watch those technical factors in the muni market. There's a little bit of a disconnect between Lipper and ICI, which is a more complete data set. Lipper showed bigger inflows last week. ICI put out their data. They're on a week lag, and their numbers are somewhat tighter. So going into the end of the year, I've started to hear some things from analysts reminding people that there's a seasonal trend in munis, and it's not good for demand. Between now and the Christmas holiday season, you typically see some pressure, even outflows from muni bond mutual funds as people are raising cash for other expenses, which then reverses typically in January. So we'll see how that plays out this year, given the run up in muni bond cash flows, all that we've seen for most of this year. Well, we'll see how that plays into the next 8 weeks. But the fact that they still are marginally positive right now, despite the volatility around the election, is a good sign, and we'll see how things play out.
Absolutely.
What about the new issue market this week? Any deals transact? We definitely saw kind of a return, definitely not to the full year-to-date pacing, but better than last week.
Absolutely. So despite the holiday on Monday, we saw right around 8 billion in supply. BAM had a nice week. We priced around 330 million across 21 series in 8 states. And a couple deals to highlight here were the 88 million Jacksonville State University in Alabama, which was priced by Stifel, and a 55 million Northern Illinois University, which was priced by Piper Sandler.
And the clock is ticking down to the end of the year on how many more active days there'll be for pricing. One full week next week, though. What do you expect?
Sure. So it's definitely building. As of this morning, it was over 9 billion for next week. And we expect to see a pretty busy competitive deal flow as well. And a deal that we'll be watching here at BAM is the 66 million City of Terre Haute, Indiana Sanitary District revenue bonds that will be priced by Baird.
Very good. Well, thanks for your time this week, Morgan. We'll talk to you soon.
Have a great weekend.